Good afternoon, everybody. Howard Greenberg here, Prosper Trading Academy. We are ready with dips to rips with my man, the legend, Charlie Moon, the disciple of trend, here to talk about growth stocks today. We're changing it up a little bit. How we doing, Charlie?
Doing great, HG. How you doing, brother?
I'm doing well, man. I'm short-term bullish in this market right now. I think I know you are also. We've been talking today, both of us. It's kind of funny, man. Scary. We didn't talk all weekend. We both came out of the weekend feeling the same way, I think.
Yeah, for sure. I've been a little bit bullish too. I know you have been as well. We've both been given a little bit more buy side signals here as of late. The growth stock aspect is really important, right? That's kind of the anchor on the sinking ship that helped drag this market down very, very quickly. We talk about major haircuts, and we're talking about in prominent names. We talk about growth. Most people may think like BYND, et cetera, but Facebook's considered a growth company. Absolutely. Apple catches a bid because there's, growth aspects like wearables and subscriptions that they have started to build out on. But you see Facebook, or I'm sorry, Meta, get that kind of a haircut. And then we say, well, when do we start buying? And, what's very prominent that I've seen in a lot of these names, these momentum names, these huge upside performers and these absolute, face melters to the downside, is that almost all of them collectively are holding what's known as a floor. They're creating bottom patterns. Now, I don't know what you look for as a bottom pattern, but for me, it's a basing pattern on lows. It's basically a low being established and the stock supporting or going sideways from that level going forward here, and until it makes either two moves. It's either going to go up or it's going to go sideways, right? It's not going to go any lower. It's established that low. So, we called Meta 2 days ago, or yesterday, actually, in at 160.81s. It traded as high as 171 today. So a little snappy play, taking a little nibble on CRM. Snow's a little shaky. I'm chasing after snow right now, buying in at the very absolute value play on Airbnb. You knew I got in on PayPal recently and SQ. I know that you're looking as well. So I don't know if you're looking at it the exact same way, but we're definitely getting the same type of feel. And that also tells me how these markets have been correlated and such, and the trading behavior as such. So what are you looking for in these names right now that are trying to hold, or why are you starting to get into the buy side plays and being more aggressive there?
Sure. Quite honestly, for me, the correlation's coming back. So, we sort of separated for a few weeks as Three Arrows Capital and Celsius and all of that disaster sort of played out, and crypto took a deep dive away from QQQ, NASDAQ, and the SPY. Yeah. But we really jumped back in, and what we're starting to see is we're reestablishing ourselves, like you said, at a little bit of a higher floor than the last week, back into what we saw the third week of June. So that's it for me. The other thing for me is fear and greed factors finally moving back to about 20. So yeah. I think we're going to see one of yours, you called it out, so I've been looking for it. That's why I think I see it, quite honestly, is a little bit of a relief rally. You know what I mean? Is I'm not looking, as I was telling the class today, not looking for huge wins here, looking for 10, 15%, and we're out. That's what we did with our short the other way with Bitcoin, 15%, get out, we'll restart again. That's what I'm looking at here. Solana and Mana, the two that we're in right now. Looking at Atom and Near also, but again, reestablishing that range that we saw the third week in June for me is definitely big. One question for you, Charlie: are you looking at all? One of the things I was looking at with some of the Bitcoin mining ones is ones that it maybe took these huge haircuts and are giving getting their quarterly reports or giving some forecasting out. And you're seeing some of them give pretty decent forecasts and still go down. Yeah. So those are the sort of the ones that I've been sort of looking for. And I'm looking at that in crypto too. Who's giving me some good news lately? Who's really, look like they have something going on. I think Solana that was what I was looking at. They started to get some NFT traction taking place again. So that's why I jumped after that.
Yeah, Riot, you shared that article after I mentioned, I saw that news release about Riot Blockchain, says their Bitcoin production rose 73% in June. They also had a management announcement as well, where they promoted from within a new CCO, a chief commercial officer. So I know you're a fan of Argo. I looked at Mara as well, Marathon. The negative was CLSK. I don't know if you follow CleanSpark at all, but CleanSpark actually reported, it looks like, softer numbers in comparison, even though they were able to actually scrape up 339 total Bitcoins. I thought that was actually pretty positive for them, and they started retracting. So I don't know if the issue with the miners right now are the costs of business, which is the rising energy costs, that they're always looking to balance out their margin with, the lowest energy pricing that they could get, because obviously that's their fuel for revenue generation. I like, you and I have talked about this. I'm not sure when the time is, but I like the pricing on a lot of these miners, and I like the value. We compared to where it was, let's say at peak Bitcoin demand, a name like CLSK, for example, was at 2360 recently. I think that was around peak. I'm going to go on to the weekly chart. They hit 42s. Mara hit 83s. Riot hit 79. When we see these names, right, at those levels, and now there are $4, $5, $6, $7, you got to say, hey, look, am I looking at it now, which the chart looks awful, or am I looking back at the long-term perspective? Regardless if they ever get back to those levels, I have a hard time to think and really just find in the fact that these stocks are just going to remain grounded into the dirt for forever. It's possible, but a good example of a stock that was basically in the dirt, pumped on the original Bitcoin rally here a few years back, went back into the dirt, maybe even lower, and then came back to life, although it wasn't for, 40 to $50 range was Hive. Hive blockchain was another name. And if I just feel like the association, the demand is going to come back if crypto rallies, and these names are dirt cheap. If you said, I wish I would have bought Marathon, in 2019 when it was $2, $3, and now we're here, the question is, well, what the hell are you thinking? What are we waiting for? Is there going to be a big difference in long-term value if you buy at $5 or $2 versus if it's at 30 to 50 or 60? You're not going to really care about that $3 difference. So I like the idea of looking at these names as a way to play on crypto at a very cheap valuation. And, we say crypto, but it's dominantly for BTC. And again, if you love BTC's value, you believe in the upside in the future, then you have to look at these names just the same way. And that's exactly what you're doing. Your whole thesis is basically built around all of that, right? Am I wrong?
Yeah, pretty much. The only thing that you left out is definitely looking at their, quarterly reports to see what they have at outstanding debt, what their cash balance sheet looks like, because you will see a couple of those names you mentioned, quite frankly, I don't think we'll make it out of this. We saw Voyager.
I don't doubt that.
Today, you're going to see merger and acquisition. So, I'm also looking, what is the breakup cost of it, for some of these. And I'm looking at the ones that have the best cash balance sheet and the best Bitcoin holding still.
Okay, hold on, Howard.
Yep.
Howard, who do you think is going to go bankrupt out of these names?
Not bankrupt, but who's got some serious headwinds? Mara, you mentioned.
Okay, so you've mentioned Mara before. So do you think any of these companies are going to fold?
Your CleanSpark's got some issues regulatory wise. They've also had SEC wise.
They're heavily shorted, by the way. They've been nailed by those short reports.
They've also got some. You hit on a couple of things. A Bitcoin miner is only as good as the price of Bitcoin, and then the price of their electricity. So I'm looking at people who can control those the best. who have shown that they have the best management. So Mara has also been famous for overestimating their delivery time of machines when they'd get them online and having machines offline. So they've had some real big problems with that.
True.
In this time of economy, that will seriously cause problems. So I'm looking for the best management. No, I'm not a fan of Peter Thiel or his brother, who is, the CEO of Mara. I don't think they do a very good job of running their companies. And I think that you're going to see companies like Riot and Argo, like you said, are going to pick up the pieces from Mara. Mara is going to need to sell machines. They're not going to get them online. They don't have the hosting spaces for it. Mara doesn't, what Mara will tell you is that they're different than all the others because they don't own any of their own facilities. They do everything at hosted.
That's true.
So they run a really, really different ship. And their ship is based upon other people a lot more than, I like controlling my own destiny with like a Riot, who just had, not only owns their own facility and is going to have the largest facility in the world in Texas, but also owns the power plant that provides the power. So they're behind the meter. Yep.
Howard, okay. But you don't think that if Bitcoin starts to go nuts, which generally means it starts to go parabolic, that collectively, regardless of fundamentals.
Oh, they'll all go up. Absolutely.
Right.
But I want the winners. I want the.
I mean, I'm not in that business.
I want Apple, not Qualcomm.
Hold on. I'm not in that business, guys, just so you know. I don't look at balance sheets. I could rarely give a rat's what about fundamentals. I don't ever look at stocks in that way. I don't. That's not who I am. I'm not a guy that even barely understands those sheets. Do I understand fundamentals and what's positive and negative for stocks? Of course. For me, I'm always going to be looking at things like an opportunity. We talked about that, right? I believe in charts because what Howard and I do look at, which we are very similar in, is order flow, big money volume. Generally big money doesn't just generally risk it for the biscuit. We could see that at times in equities. We see that with YOLO options. We see that, with, leveraged out positions in crypto, which leads to wild liquidations. We will see that, of course. There's definitely degens in all of us in some form or fashion if we're active in the stock market. But I always love the collective energy and opportunity. And really, that's kind of how I view it. Now, I'm not, here to dispute what Howard says. When Howard says these are his racehorses, guess what? I am backing my money behind his bets because I know he's not going to play his money dumb and he's going to be on the smart side. Obviously, he knows a lot more about this sector than I do. But, I'm not a momentum chaser. I'm an opportunist. And that's how I always look at this. From a long-term perspective, I'm not an investment advisor, but, history always tells me it loves to repeat itself. So that's what I kind of lean on, especially when it comes to charting. That's really what charting is, kind of, isn't it, Howard? It is.
Yeah, using history to predict the future.
Yeah, history repeats itself. It's the course of nature, and really, it's the course of what successful traders are. They're creatures of habit. If it works, why are they going to transition and do something different? That doesn't make any sense. That's like Ferrari trying to make an economical vehicle for everyone. That's not their MO, and it's never going to be. It's interesting that you brought that up. So when we talk about Mara and Riot, right? What I have noticed was that Mara was the stronger performer, but it was probably more the memer name, I guess we could say. And Riot, what you had said, was really smart. I think we brought this up in one of our recent podcasts, right? Mara was doing their own thing. They didn't really raise as much capital as they could have, where Riot took full advantage of that opportunity at inflated prices. They knew that this was not going to be sustainable. They knew that it was purely, in terms of their stock pricing valuation, was purely based on market demand because of the crypto craze. So what did they do? Well, they started raising capital at the highest valuation and basically was just getting free money that they didn't have. And now they're sitting on this cash, right? They're sitting on this cash, Howard. They're in a better position for the ugly, which is happening right now, because they do have cash on hand, right? The one thing I do know and understand is what is the company's debt and what is the cash on hand available.
Absolutely.
In the worst
and that's
case
all
scenario,
I'm saying with the sheets on these guys is that Mara almost has a 3 Arrows Capital Celsius feel to it. They levered themselves to the hilt during the bull market. They borrowed as much as they could to buy as much. They've got $260 million in machines coming, but they have no place to put them right now. And now, who's going to give them the spots?
Exactly.
This is where this is where these other companies, will buy up the data centers, outbid Mara, and force them to liquidate some of their positions, of machines. Because they don't want to sell their Bitcoin, so the other thing they have to sell is machines. And if you've got $260 million, $250 million in machines coming, over the next 90 days or so, you might need to raise some capital. So that's what I'm looking at.
Yeah, and I mean it's good to have, I guess, a VC brother, who made all his money in the tech sector. If you guys don't know who Peter Thiel is, they at one point was calling him like the wonderkin of Silicon Valley because he had pretty good investments in some pretty big tech names. Facebook is the biggest, but PayPal obviously is what put him on the map. He was partnered with, Elon Musk in PayPal. And now he's running the ship on Palantir, which is
Palantir,
yeah. And it's obvious he has cash. How much does he want to invest in tomorrow? If he does, is that cash even going to be available for tomorrow? That's what I guess some people may think. I don't know. I know that right now these stocks are not performing great, but I do love the longer term, and actually love that Howard pointed out directly Riot and Argo as two of his favorites. So guess what I'm focusing? I'm focusing on those two. For me on the equity side, guys, there's been, and most notably today, which is we're recording this on the 6th. I don't know if I'm supposed to say that, but we're recording this a couple of days after July 4th. And what I've noticed is some pretty nice basing breakouts. And they're in very notable names. Now, Carvana yesterday, if I could pull that up, I'm not going to have it on the screen, but I'm just going to pull it up on my end. Carvana, which is an extremely shorted name, and the next one is even more shorted. Carvana short float is somewhere registered around 35%, maybe even 40%. Yesterday made a $7.19 trading range on 19 million in volume when they're averaging 11 million over the last 30 days. That is pretty stupendous. That is what we would call a short squeeze. A stock that, I mean, it still moves pretty good. It moves $3.50 a day on average, moves $7.19. And going vertically, it really did smell like a quote unquote short squeeze coming. And another name that I want people to put on their radar right now is Beyond Meat, BYND. Now, again, fundamentally, I don't think I'm the biggest fan of this company, nor do I think they're really making a lot of money. At some point they have to bring down expenditures. I know that's their biggest overhead. You make meat out of chemicals and whatever weird materials, it's going to be expensive. It's not like we could just grow this in our backyard per se. I guess some of the items, but they broke out of a pretty significant range around this 29 price, and the 30 price is where they could get going. I could see a real big squeeze potential here where they can make this run to like 35 to 40 range in a very short period of time. So I'm assuming this is going to be out either by the end of this week or next week. If the pop doesn't happen yet, start looking at it. Why? Because BYND, right? I said Carvana somewhere between that 35 and 40 short float. BYND has a 40 to like 44% short float, and the overall float for BYND versus Carvana, it's actually much lower. Carvana's float is still pretty low. It's around 90 some million. BYND is at around 58 million shares, and almost half of that is short. So there's a potential squeeze play coming. Another name is going to be RBLX. And I wasn't lying, and I don't know how to do this. RBLX is certainly a name to watch. They don't have the same float, but if we look at the overall kind of context and structure, actually, I'm just going to share my chart real quick. Do you see the BYND chart, Howard?
Yep.
Okay. So right now, this is that consolidation breakout. And this is the bottoming pattern that I'm noticing. Notice how the 52-week low flag is right there. And ever since then, we've actually been holding on a higher tilt. I actually have a name for this. This is called the sub, which stands for shut up and buy. This is usually that cupping pattern for that breakout reversal. Hey, listen, it's actually a client, because I noticed this pattern a while back, and a client's like, man, this is so good. Let's call it the sub. And I'm like, what's a sub? And he's like, shut up and buy. He's like, that's basically what you tell us to do when you see this. So the potential here is really kind of stretched out to the next moving average. There's a little bit of resistance here, but truth be told, if we can find price acceptance, that means it's kind of geared for that $35 to $45 range. And if we see growth kind of being respected and being priced back in, we should see the markets try and make a move and rally here. And if that's the case, this is a name that you have to watch very closely for a strong breakout. In all respect, the news out of the FOMC minutes that came out, it's certainly guiding towards the fact that the Fed is trying to front load the interest rate hike over these next few months. But I should have seen these stocks get absolutely destroyed. And some of them I did. I did see new lows in a lot of names. However, I saw plenty of names making new highs and breaking out. And that's where I kind of see that demand coming in. And that leads me to what I wanted to ask you in the first place. I know that you took some interest in Solana, but are there any kind of projects, new coins, or maybe some old and new ones? I know that Mana is another one that you were looking at that is starting to kind of bubble up and have this little potential to, I know you're talking about 10 to 15%, but maybe even extend beyond that in a very short period. Anything on your radar, bud?
I mean, right now, Adam and Near are the two that I'm looking at.
I actually love Adam.
Yeah, they ran into some problems. They were, part of the, Luna Terra was built on the Cosmos SDK system, ecosystem. So they saw a little bit of negativity from that play off for them. And then secondly, they had some issues with the co-founder coming back to the team and causing some controversy, but now they've worked through that and are starting to move back up. And then secondly, in September, we're going to see Near take the next step in their roadmap, which is pretty big. And we're going to see them become much more decentralized and hit the next levels. Near traded as high as $20. It's down at $351 right now. You could definitely see that make a nice run up. That definitely could hit, 675, that range. So, you're looking, that's a pretty big, close to 100% winner if you could do that.
Yeah, that's what I'm talking about, man.
But, that's definitely, and if you look at the chart on there, it's been consolidating sideways for a week here. If it breaks past that 10 and 20 day MA just above it, it's going to blast off.
Can I also throw out another name that could be a huge pumper? That's a meme stock. Keep an eye on BBBY. Now, GME actually announced today that they're doing a 4-to-1 split. I didn't know if you see that or saw that. That's going to kill them forever. That's going to kill them. 4 times more shares.
Now there's so many shares, right? Yeah, so they can short the living.
Well, they're still fairly low in comparison to others, but they're just not going to, mow ass like everybody expects. But BBBY, Bed Bath and Beyond. Okay, so Ryan Cohen has obvious interest in this name. He's actually just came out with a scathing letter, kind of condemning the executives of BBBY for overcompensation. Their float is around 69 million. So when GME had their explosive, run from 4 to 400, their float technically was around 48 million, 44 million, give or take. BBBY is at around 69 million. Their short float right now is registered. It says on Morningstar 87%. I don't believe it. I'm more in the tune of around 35 to 40%. and they're trying to hold their on 438. Their CEO made an announcement, or there was an announcement today that the CEO bought 50,000 shares. It's not much, but the fact that there's insider buying may also bring a little bit more conviction and help squeeze the stock. This is something that I could see doubling up over the next week or so, or even within one day if the momentum really catches fire. So, folks, be on the lookout for BBBY, three B's and a Y for the pump.
My whole problem is they don't sell beds. How do they call themselves Bed Bath?
they sell sheets.
They don't.
Hey,
they don't sell beds. So why aren't they called
towels,
sheets, towels, and other stuff?
They sell pillows.
I'm going to make a store sheets, towels, and other stuff. But I'm going to sell beds and actual bathtubs.
You should call it Bed Bath Sheets. Oh man, it'll be interesting to see, because if we get these like notorious pumpers, BYND is one of them, and these high demand names, and RBLX is a meta play. Obviously, I'm long meta right now, and we just see the names like the growth sectors, cloud.
Well, also, do you think I think the meme folks, the apes, are sitting on the sidelines waiting for any news on something to throw money at. They haven't found anything fun for a couple of months. So if they do get something they see start moving, I think you're right. I think they're going to all ape in. I mean, you know what they do in between?
Yeah. You know what they do? They trade AMD and Tesla in between.
All right.
Yeah, but they definitely, you're right. The apes love to just play the memes, and usually they'll start funneling and shifting money over. So maybe if we see Tesla dump tomorrow and BBY pump, we know why.
Yeah.
That'll be an interesting dynamic. Hey, listen.
Definitely worth a bet for me. I'll be looking at it in the morning. I did well on your last couple of those that you've said like that.
Hey, man.
Although new won't move.
It's trying, man.
I know, man. It makes to 419 every day.
I got to be honest with you. The fact that it's holding is more than enough for me, but my patience is running really thin. I told you
I've got options running out in a couple of weeks, so mine are a little different.
Yeah, I mean, I got time. I'm holding the shares, but what are we up? 9 cents, 11 cents. Killing it, man.
Not expecting that from you, Charlie. Come on,
man. No, you're right.
I'm all excited. Next week, man, we'll be doing this together in person for the first time.
Yeah. What's going to be really exciting, folks, is that we're going to do it live. We're going to be right next to each other, hugging and holding hands. We'll definitely be chatting it up. It'll be a different background and environment. Right now, Howard's out in DC. I'm out in the Chicagoland area. And we have all this space in between us. But now we're going to be sitting side by side, yucking it up. Our man, Michael Clark, the producer, the editor, the extraordinaire that kind of makes us look good, I guess, is going to be sitting there with us as well.
Absolutely.
And we're hoping to have a special guest. Now, that's TBD. We don't know if it's going to happen, but we're hoping to have a special guest. And if this gentleman can join us, we're probably going to yuck it up. We're going to ask some pretty serious questions. And so if there are any follow-through questions, you folks should pop them in the comments below. Now, this isn't the end. We'll ask you to put more comments below, but that is what's kind of in store for us in the near term. And Howard, it'll be good to see you, man. We could talk live about this and then we'll probably be a lot louder, don't you think?
Yeah. Well, plus we can look at the same charts.
Yeah, I guess we need a screen share more, but
yeah, that's okay.
Right. Again, we'll see. We'll see how
people spend too much time looking at a screen all day.
How long do you think this rally is going to sustain in crypto? I guess it's a rally, but
yeah, I mean it's a little bit. The key for us, the key here is Bitcoin. Alts are moving pretty well. Bitcoin really hasn't. So I think if we can get above 20,500 here, that we're going to see a movement. The same thing. I think Ethereum passed its big test today. Latest test net on the merge went successful, so there's only one left. I think we could see a run to 1,300 there. So I do think we've got a little bit of room to move. I think we can go through the rest of this week, as long as Sam Bankman-Fried doesn't go out of business or something tomorrow, we'll be okay.
I hope not.
He said today he has $2 billion more to spend.
Right.
I told him he could send a couple of million my way. I'd be okay. Yeah, I'll help him. I'll help him with a little stimulus spending on crypto. But yeah,
We'll
that's
go to waste.
what I'm looking at. I mean, we don't have any real economic news for another week until next week, the 15th, right?
We got
Given
some.
some big-
It's not earth shattering, but we got
CPI is going to be the big one. We got to see
Big
we got to see what the consumers are actually saying.
yeah. So
And it's right after Amazon Day, so we'll have Amazon Day numbers.
yeah. I'm not
Day.
sure if that's going to move the needle, but I will say that it's going to move the needle if they show a uptick, meaning they have record numbers again. I think that's what the market is kind of thirsting, and because
Right.
Amazon's downgraded their guidance, plus
Right.
they've warned about how soft the e-commerce business is getting. Not, I mean, let's talk. They're still the most dominant figure by far. We're talking about like they own 95% of the true space. That's kind of the amount in volume of transactions they do, but there's a difference between 99 and 95%, I guess.
Absolutely.
And those are just made up numbers. I don't know. But the Sam Friedman, that comment, I kind of view that as very bullish. It's the fact that he's saying, look, we have 2 billion ready to backstop if needed, right? That's your backstop here. So, I'm not fearful. I'm willing to sit here and throw more money into this because I'm a believer. And I hope that's going to be, a partial catalyst for the upside. Just like I'm actually hoping that CPI is going to be a very positive stuff for this market. I don't really normally try to time things out, Howard, because that's like trying to predict the future, and you just look like an idiot when you try to do it and you're totally wrong. But truth be told, this is a perfect environment, right? Low volume, less active money, because like you have mentioned, people are going on vacation. Well, I mean, daily volume in the ETFs for the SPY and the Qs, or the S&P 500 and the NASDAQ, way, way down and keep crashing lower. And markets are moving up. So it's almost like that's the backstop. And I bet you right now that CPI data comes in way less than expected, or let's say it's either at the last report or lower. That's going to be extreme positive in my opinion. Now I could be wrong, but I feel like that's where the market would be like, okay, well, maybe we finally peaked. And the last time the market felt that we had peaked, we had a pretty strong rally, and it was a sustained rally for a few days here. And so I would rather see the market slowly grind up as opposed to have 1-2 explosive days only to be teed up to be dropped on your head again. What goes up fast comes down fast. But when we work our way higher, that's more of showcasing the market demand in real time and having it really being one-sided. And that's a beautiful thing, right? The markets always went up, and we didn't do it on high volume movement. We did it on low, choppy grinds. It was just like that day in and day out. So if we're trying to time it, I like July to the upside. I think August is somewhat bullish early, and then it starts getting soft because I'm going to be very bearish on next earnings report. There is going to be some ugliness being talked about. Whether we have guidance lowered or not, I think that if companies miss, they're going to end up getting punished because they're no longer going to be on the lows. They're going to be at elevated prices from where they were. And it's more like you got to go back down to where you were, and you're going to get down there very quickly. So that's kind of what I'm anticipating. The previous discussion about growth stocks exploding to the upside and making those basing patterns is only kind of solidifying or helping verify what I'm speculating here in the near term. And we'll see if this sustains. I mean, if it sustains, it's a great thing. People are making money. People are more comfortable, less, FUD in the market. Short sellers getting squeezed out, which is only going to help propel us up. But at some point, reality is going to snap in, right? Reality equals inflation. And if inflation remains at these levels, if we're still paying $5.70 for a gallon of gas, and milk is now up 30% from where it was in June, and food and meat prices and everything else is still going on the up and up, and we're not seeing that respite yet. Again, those are early indications that a recession is coming. The inverted yield curve, right? We heard Charlie Lewis talking about that in our coaches chat. The 2-year and 10-year has been inverted for the last few sessions. And war hasn't ended yet. So there's
Yeah.
no
Well, you
real.
just nailed it, Charlie. And what I feel too, the same way, is that we're also going to get the end of July, beginning of August is when we'll actually, we'll hear the R word be talked about in more and more terms of recession. And that will, that's what scares people back down again. That word, a lot of the young investors didn't live through the last recession.
Yeah.
Never mind, you know what I mean? And never mind trade during it. But they didn't live during it. The 70s and the 80s were not fun. The difference, everyone's talking about the difference right now being, the employment rates, but it won't take much to flip those around either, right? A couple of the bigger companies run into some trouble, layoffs come out. Let's hope that doesn't happen. But that's why I'm looking the same as you. I think August is when we're going to start to see the dog days of the bottom. And then hopefully we start to, like you said, grind our way up. It's not, we don't want to take that. If we take that elevator up, we step off the cliff on the way down.
Yeah.
So let's try to walk up the stairs.
You talked about layoffs. Shopify announced layoffs today. And they said they're going to freeze hiring practices or slow it down dramatically. That's another one, right? Netflix went through a second round. Tesla's been talking about it. So there's plenty of companies that are laying off right now as we speak. And there's a lot of companies that are freezing hiring practices. Now, overall, it also depends within the sectors of where hiring is happening because my wife works.
If you can fly a plane, you can get a job in about
right. Well, my wife works in accounting, which is always known as a recession-proof industry, but she works for KPMG. I don't know if I'm allowed to say that, so please edit that if I can. And she's actually working internal, so she's working in development, and their biggest development is tech advancements. And so they're actually on a hiring spree right now. The problem with KPMG is that they can't get enough people. And that's for both the accounting and the tech integration side. So it's not like every single company is in this practice. Apple hasn't announced it. Amazon's announced it. I think Meta's still hiring as well. I think Meta's actually trying to hire and increase their AI division. They're just spending less on R&D and working more on, they're taking that money and working more on bringing in talent. And
highly skilled labor is definitely, and that's what I call AI engineers and developers or highly skilled technicians. Those people are always in demand. You're right. And they're hiring every one of those from JP Morgan to whomever. The same thing as, quant traders. If you're a great quant trader, they'll hire you in a second. If you can write, your own APIs and program and develop yourself. But the problem is that's not who's getting laid off. Those people aren't getting laid off. So that isn't helping, fuel this, unfortunately, or won't help.
And of course, that layoffs lead to, more economic issues and more economic concerns. And,
I've been negative about what's going to happen with housing. And now I'm actually reading, theories that this subprime, auto loans are going to be the next issue that we're going to see.
Yeah, so they've talked about that for a while. That auto loans has been at a bubble. The default rate's already been at
huge. I didn't realize that. That's what I'm saying. Like I didn't
for 3 years now.
Yeah, how do we not know about that yet?
Because they hide it. But if you lift under the covers and look closely enough, there are plenty of issues. What about rising debt, Howard? Right? We basically killed out. I think we were talking about 70-80% of credit card debt during the lockdowns during COVID. And now we're over 14 trillion in debt, the highest rate it's ever been historically. People just went out and started look, I was deep in debt, but I took care of it. If I did it once, I could do it again. And they just went in deeper. So now we have that. So we have credit card bubble. We have defaults, screaming higher for the auto industry. And eventually we're going to see it, leak into the real estate industry. We're not going to have, the default rate get too crazy, in real estate just because interest rates were so low. It was so different, subprimes are less and less, there's going to be a default rate, but it's not going to be it's not going to be at a point where it's going to crash the market and or destroy our economy. But the car thing, the auto thing, that has a chain of events that could follow through. And that's where the banks get affected. And when banks get affected, they have to tighten their belt. When they tighten their belt, they cut losses. And when they cut losses, that leads to extraordinary stock price movement, bond price movement in some senses, because they got to hedge, or they got to, replace, or they got to, work within in some form or fashion. And that's the abnormality of that news. And that's where the dynamic is very interesting, because how can it affect us as individuals and the stock market? And people don't realize that it could actually be pretty substantial. It could take down a lot of different sectors.
Yeah, it hits a lot of different spots. It doesn't just hit, your Carvana or your Ford. It hits all your banks, lending companies, your insurance companies. All those all get affected by that, without a doubt.
We're going to wrap this up here pretty soon, but I just want to say, Howard, any final thoughts about maybe what the markets, your markets in particular, are going to be doing going into this, Rust Belt weekend, and starting off, the second week, going into the CPI data next week, I guess.
Like I said, I think I think we're looking pretty good. Again, my key metrics I'm looking at is Bitcoin getting above 20,500 would really give us a little bit more momentum to see the alt pump. And if we really could get moving, anything above 22.5, the 200-week moving average would really signal the market coming back. So I think with the stock market, we're going to continue to just hold ground. We're probably going to have our down days overall. It's less than a week till the CPI data, but I actually think we're going to rally up pretty decent overall, from where we started this rally to where we end up finishing. I don't think it's over just yet, but there will be a sprinkle of, back and forth days, very similar to yesterday, somewhat like today as well. But the thing about the market is it looks good for now, and everything can change once that report comes out. So if the CPI numbers are good, we'll be in pretty clear sailing for a little bit until the FOMC meeting at least. And I don't expect that. I'll tell you one thing, folks, and we'll probably talk about it more as we lead up to it. But if the FOMC decides to say, well, September, October, we're probably going to hike rates a little bit higher than that 50 basis point, the markets are going to hate that. Yeah. They're going to hate that. So let's hope that the FOMC is only going to do July, normal rate, 50 basis point max, potential quarter point basis, which is 25 basis points. And they talk a little bit more about unwinding their balance sheet. They're not trying to drop it on the heads of the buyers of bonds and MBS securities. And, markets just like what they hear. And then we go to earnings season, and all hell breaks loose. Absolutely, man. I'm excited for it. I do think we got a little bit of a relief rally in front of us before we hit some more headwinds. It's going to be choppy. One of the reasons you want to listen to Dips to Rips is so you get the information before others. For Charlie Moon, the disciple of trend, myself, Crypto Hondo here at Prosper Trading, thank you so much for joining us. Have a fantastic week. And next week, you'll see both of us in the same screen. See you then.
See ya.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies properties of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.